Welcome to Tradespoon. My name is Vlad Karpel. I'm CEO and founder of Tradespoon. And today I'd like to go over current market conditions, what to expect next in the market, as Paul just finished his speech from Jackson Hole Symposium. What themes or what trends it makes sense to follow, whether it's healthcare or consumer staples or AI stocks or electrical vehicle, right, or penny stocks, right? So there are different themes, different strategies. We'll review which one makes sense to pursue and which one maybe not, right? And what to expect from the market short-term and long-term. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Always want to welcome new subscribers. This is my brief bio. I have an unusual background. Most people are ex-traders, right? And been trading all, on the floor of some exchanges. My background is a little bit different, technology. So I was a CTO and led technology for several startups here in Chicago. Always been in fintech space since college. So very passionate about building technology. I have a master's degree specializing in artificial intelligence, building neural networks. We have a team of financial engineers and programmers that are constantly building new and improving our models as there are new advances, especially lately in AI. So I want to take this opportunity to say thank you to everyone who's here. I really appreciate your time commitment. I think it's important to learn, right, and important to invest time. So when you do have a chance, I do encourage you to either participate live or view the recordings. Disclosures are very important. Please read them. I will go through several trade ideas. This is real trading with real account. So there are risks associated with trading stock and options. So please, if you're new to trading stock and options, I encourage you to visit this link, optionsclearing.com, to understand the risk associated with trading stock and options. And personally, I'm not a financial advisor. I'm not here to give an advice, right? I'm here to show you. I'm not registered with FINRA or SEC. I'm here to show you what I do in my own account based on my own risk tolerance level for general education and information purposes only. It should not be assumed that the future trade picks will be profitable or will equal past performance. All right, so disclosures are important, risk management are important. All right, let's talk about, there are two events this week that happened. One is NVIDIA, all right? NVIDIA was, from my perspective, this was a home run, right? It's basically just doesn't get any better in terms of earnings. It does not get any better. I think somebody said last time it was Amazon in 1995 or Apple that can deliver such a growth in a short period of time. So initial reaction, there's a huge pop in the market, right? Because of the stellar earnings from NVIDIA. I think close to 11% up. We got to a 520 and now basically turning negative, right? Give up all of the gains and turning negative. Why? I mean, the main reason is, revenue did not go 5 times, right? But the stock price did, right? So if you look at the weekly chart, right? If you look at the weekly chart, we went on NVIDIA, right, from 100, right, on October or November, December, we were at 100, and now we're at 500, right? But revenue did not, 5 times the revenue. And I guess it's all about future projections, and it just wasn't enough to build confidence among investors. Similar price action, NVIDIA or Microsoft, right? Or all of the AI stocks. Initially, good earnings, you have a pop to the upside, and then rolling over and pulling back. So it looks like, at least as of right now, NVIDIA will have a similar price pattern, false breakout, and potentially, at least close this gap right around maybe 450, 430. So NVIDIA is turning negative. More importantly than NVIDIA is the Powell speech, right? I mean, it just ended a few minutes ago. Initial reaction was positive, right? Yield did drop 4.2, but now it's actually turning positive and going back up. Why? Again, kind of what we said, if you follow my live trading room environment, he basically did not say anything new, right? He did not say anything new. He did not say that the new norm will be 3% and they will start lowering interest rate. He said, business as usual, right? The goal is 2%. We need to keep a restrictive environment, and if we need to raise interest rates more, we will raise them more. So nothing new, nothing different, and at least as of right now, we still need to give it time. I would wait at least till end of the close, or maybe till Monday close, to figure out the next trend. But this is the most important chart, right? It's more important than Nvidia or any other stocks you're following. Is this attempt to break out through October highs, on the 10-year yield. If we do break out, and you can see the correlation, we are trading similar to last year, where the fear of inflation and higher for longer interest rate environment is causing the markets to pull back, right? So people are selling treasuries and they're selling technology, right? We talked about that in March, that there was a diversion, right? Yield actually dropped, the market dropped because of the fear of the liquidity issues and kind of economy falling apart. Now that fear has subsided, right, that there are liquidity issues, and we're back to fear of prolonged inflation and higher interest rate environment. So people sell together. They're selling technology and they're selling TLT at the same time. So I would watch the yield. It's sitting at the important level. Again, my rule is usually 2 to 3 days. Just because it's, it was lower, now it's higher. By the end of the day, it will be lower again. It's just people are digesting the news. They're digesting the news. So my view on the market is that I personally don't think we'll break to this level. Purely from statistic point of view, when you do have these multi-months, multi-year overhead resistance, you need to have some positive or negative catalyst to break out to the upside. Business as usual, there's no new information. Paul didn't say anything new, so I'm not sure what the reason for the rates to go up. One argument was that we're going to have a new norm, right? Instead of a 2% target rate, 3%. If he said that, if Paul did say that new norm is 3%, then we would have probably still probably pushing higher. The yield would have pushed higher significantly. He didn't say that. He basically reiterated 2% target. So I don't think the yield will break. What does that mean to the equity market? Well, yield, I think, will pull back because it's overbought. I think dollar will also eventually pull back, even though right now it's grinding higher and it's negative for the markets. And that will at least bring some kind of stabilization to the equity markets, right? Because spiders, spiders is basically retesting last week lows, right, around 432. So that's the main support level. So I think if yield pulls back and dollar pulls back and at least trades in the range, then the spiders will hold 432 at least for a couple of weeks, right? Or at least for a couple of weeks. If yields jump and dollar continues to, approach 105 level, then we will break 432 level. So I think personally, it's just a matter of time to break through 432 level. Whether this happens, next week or it will happen, end of September, we'll see. The bull argument is the seasonality, right? And that the market is oversold, right? There are two good arguments, well, three, plus, the old glass half full, glass half empty, right? That the economy is strong and resilient. Paul just confirmed that inflation is going in the right direction, even services, and so and from seasonality point of view, usually market does reach some kind of a bottom in August, right? And then we do have a rebound. Maybe we don't retest the highs, but we get close to highs, rebound, and then everyone comes back from vacation, right? They kind of thought everything through, and we do have another pullback into the earnings, middle of October, and then after the earnings, once Microsoft, Apple announce earnings, and they say, listen, life is good and you guys are overreacting, then the market continues to go higher. So that's seasonality argument, but again, seasonality will not hold if the 10-year yield breaks through the October highs. So all eyes are on 10-year yield and dollar. For now, dollar going higher, yield is going higher, and semis are rolling over, spiders are rolling over, and QQQ is rolling over. Personally, I think it's just a matter of time to break this 432. It could happen today, right? It can happen next week. It could happen end of September. Short-term market is oversold, so you do expect kind of these rebounds like we had this week, right? We went from 432 last week all the way to 445, right? So 3-4% move to the upside, 3 to 4% move to the downside. Volatility, I think, will pick up. VIX is complacent, right? Nobody's hedging yet. A little bit higher, but still pretty complacent. I would be probably market neutral. Either market neutral, or if you're more bearish like I am, then maybe slightly more bearish. Because on one hand, market is oversold, but on the other hand, everyone is nervous, and we could take out the 432, even as soon as today or next week. Any questions on the view on the market support resistance level? So, but meanwhile, without guessing, without being too bullish or too bearish, one way to just say, listen, we know that 444 has been a strong overhead resistance and support, since basically June, right? So for now, market is trading in range between 444, 430. So if it approaches 430 and you're aggressive short-term trader, maybe you go long, because the stop level is very clear. If we don't hold 430, next level is probably 420, 418, right? This level. So I would keep an eye on this support as we approach us. You do have favorable risk versus reward, right? So I would consider going long, wait for reversal, and just go long. Every time we approach 444, the opposite, right? You sell short with a clearly defined stop levels, and then at some point we're going to break to the downside or break to the upside, right? Both options are possible, right? But there has to be a catalyst. Like in May, the catalyst was AI, generative AI. To break to the upside, same thing. Something has to happen that's positive. I don't know what it is. It could be. Russia, Ukraine find a peace agreement, right? They sign a peace agreement, or Microsoft comes out and says, our revenue is going to double next quarter. Okay, so you need something like that to push the market to 460. That's scenario number one. Scenario number two, market pulls back to 420 because fear of inflation and high interest rates, or you have some kind of a dislocations, right? Whether it's China, right? China is on the page of Wall Street every day in terms of how many issues they have in their economy, and this is going to be similar to Japan in the past 20 years, stagflation in China, or some other negative catalysts, banks falling apart, WeWork filed for bankruptcy, something like that. So one or two. So I would encourage you to go through this exercise in a live training room. I do it every day. People often say, Vlad, this is too repetitive. Why you keep repeating the same thing? Well, one is we have new subscribers, so I can't ignore new subscribers. And two, repetition is very important. You want to internalize this information. You want to remind yourself. So I encourage you to do this every day before market opens or before you enter a trade. Document that in a journal. Keep the journal, and basically ask yourself, depending on your time frame. You could be a swing trader, you could be momentum trader, you can be day trader, you can be scalping. Doesn't matter what the time frame is. It could be minutes, it could be weeks, but the process is the same, right? You basically say, you close your eyes and say, okay, end of September or beginning of October, 460, right? September number one. If you hold in position for the next month or two, or you close your eyes and say, okay, 418, right? Both scenarios are possible, right? You can invest based on scenario one or two. You can say, listen, three, it's just gonna, end of September, we're just gonna be exactly where we are now, which is fine. That's another strategy. And you basically say 1, 2, and 3. You devise strategy based on 1, 2, and 3. Right, 3 market neutral, 1 you're a little bit bullish, 2 you're a little bit bearish, and you determine your position size, right? Because imagine going through these rehearsal exercises will help you determine if you, let's say right now you're bearish, right? I think more and more people turning bearish, right? QQQ is pulling back, semiconductors are rolling over, so you're bearish, right? Imagine that Russia and Ukraine does sign a peace agreement, market will rally. right? Significantly. So 460, right? How do you feel at 460 based on number of position size? That will help you to kind of cool down your desire to be bearish, and you will have a proper position size. And in reverse, right? You think that NVIDIA is just going to the moon, right? They're going to pre-announce that their earnings are now going to quadruple, right? Instead of growing 30%, it's going to grow 100% next quarter. I mean, it's possible. So, and then all of a sudden market reverses and we're at 460, right? If how do you feel, right? How do you feel if the market is at 460 and you're bearish? How do you feel if the market is at 415 and you're bullish, right? Imagining these feelings, at least for me, very helpful to say, okay, Vlad, slow down, maybe instead of 2 contracts, buy 1 contract, or maybe instead of 100 shares, buy 50 shares, right? So those exercises are important, and I encourage you to do this. So we can do this now, like for end of September, beginning, middle of October. Do you think we're going to be at 460, right? We're going up 30 points, or are we going down 30 points, right? 410, 415. Or we just say, Vlad, nobody knows. We're just going to keep trading in this range, up and down, like we've been trading before. How many of you say 1? How many of you say 2? How many of you say 3? 1 bullish, 2 bearish, 3 you're market neutral. Don, good morning. Mark, good morning. We'll pull back. 2, 2, 2, 2, 2, 2. Okay, so most of you said 2. 1 of you said 1. Okay, right? So nobody said 3. Nobody thinks we're just going to chop along. Okay. I'm going to go with 2, 2, right? I think my personal opinion, I've been bearish, right? I've been bearish. A lot of people kind of said, Vlad, you've been bearish for the past, well, 6 months, I think is wrong, but I've been bearish since May, right? Since May, I didn't think we're going to break 430. So here we are back to 430. I think it's just a matter of time to break to the downside, right? Here, trading is based on opinion, right? And information. If you have new information like, generative AI, well, that's a new information, right? Then market rallies, you have to recognize it and start building bullish position, trim your bearish positions. So it happens, right? Same thing. This is my opinion as of right now. If there is a new generative AI kind of, then I will have to make an opinion and change my opinion and say, okay, 430 will hold, right? But assuming there is no new information and we just, status quo, same information, I would say then I would say that this is just a matter of time, right? It's just a matter of time. But it happens this next week, or usually from seasonality, we said it happens end of September, October. It's just a matter of time, right? This is scenario A. This is scenario B. I would be a seller into these rallies. Every time it gets to 444, you sell, right? Okay. And time will tell. Any other questions? So that's indexes, these ETFs. Very popular question. Say, Vlad, why are you concentrating on the negative, right? Just concentrate on the positive. There are stocks, right? It's a stock picking market, right? You look at stocks like, well, some of these stocks I haven't looked in the past 24 hours, but let's look at them now. Something that I've been following, TJX, right? Hit a home run, strong move to the upside. I mean, it did pull back. It's sitting at the support, but it is defining, it's not following the retail stocks, right? TJX is not following retail stocks. If I buy any of the stocks, then TJX is probably a place to hide, right? And you have a clearly defined stop loss, right? If you say, if it breaks through this breakout level, right, 87, then I would get out, right? Or you can say 50-day, be more conservative. Say if it breaks below 50-day moving average, okay, then it's time to, let go. ANF, right? Abercrombie & Fitch, great earnings, all-time high, continues to go higher. So there are some retail names that are able to do, manage their inventory correctly, build new brands that is appealing to the broader audience, and they're trading better. What else? Eli Lilly, right? Weight loss drugs. Continues to go higher, continues to outperform the market. So there are some stocks that I've been investing and trying to manage them that are not correlated to their peers, to their indexes, to the sectors, industries, and these are just a few names. Cisco, right? Even in technology, even though it pulled back, Cisco kind of a 45-degree angle continues to rally, right? Because it's considered to be a blue chip stock, pays dividends. The economy is still in good shape, corporation is still spending money. So blue chip stocks like Cisco, IBM, I think is the place where you can also consider. Industrials are kind of Caterpillar are rolling over, right? It's trading below the lows, but still you kind of have at least you have a well-defined stop level, right? If Caterpillar drops below 50-day moving average, then I would be out, right? So if you want to go long, you probably want stocks that are above their 50-day moving average. So, and that's your stop levels. If you look at any stocks that's, below, like Pelletier, right? If you've been doing AI investment and Pelletier is below 50-day moving average for a few weeks, I would probably not go long on stocks that are below 50-day moving average right now, because they're probably going to continue going lower, right? And you don't know where the low is. On stocks that are above 50-day moving average, you basically say, okay, nobody knows exactly what's going to happen, I'll buy. And if it breaks below 50-day moving average, well, then probably need to go down, sell. In terms of electrical cars, another popular theme, Tesla, a lot of questions about Tesla. Same rule. Below 50-day moving average, you probably don't want to trade that stock. Plug, below 50-day moving average, I would probably get out. NIO, same thing, right? What is Bob trading? Nikola, right? Nikola. So then, below 50-day moving average, probably not, right? Pretty weak price pattern, right? You probably be able to get a better price. So AI themes, we talk about healthcare. I think, model detected Merck and Pfizer, right? It looks like they're, build the bottom and trying to stage a rebound, right? So Pfizer, healthcare stocks, I'm long PDCO, right? Pets, you do have stocks that are outperforming the market, right? And kind of diverging. Usually it's healthcare and consumer staples, right? Like CLX. So, but obviously, sometimes tide, lifts all boats or sinks all boats. Right now, it's, it kind of, still outperforming the market, but nonetheless is down. All right, any questions? In terms of services at Tradespoon, my favorite strategy is earnings, right? Earnings allow you to get extra premium on options. So if you're an option trader, this is one of the most popular strategies. Some people do butterflies, some people do calendar spreads. That's all fine. This is just, different underlying strategy, right? But the idea is the same. Idea is the same, that you have spike in volatility, and then you have collapse in volatility, spike into volatility going into the earnings, then you have collapsed volatility after the earnings. The idea is to look at the historical volatility, implied volatility, and as long as implied volatility, is much greater than historical, and options have enough premium and they're liquid, you sell iron condors, right? So Marvel is the perfect example. It trades in pennies. It trades in pennies. I was able to collect 17 cents, 21 cents on the puts and call. That's about 50 cents. That's actually on the $56 stock. It's close to 1%, right? And the idea of compounding investment, right? A lot of people would right away say, Vlad, okay, I did one contract. I made, I don't know how much was it, $40, right? After the hedges, I made $40. $40 doesn't make a difference in my life. But again, if you're looking for home runs, you're absolutely right. But if you're looking for compounding investment, right? If your mindset is, building, growing your portfolio over time, not in one day, not in 1 week, but over time, then, if you can make 0.5% or 1% by holding position overnight, right? 824 overnight, it compounds, right? Even if you make a couple of trades like that a week, some successful, some unsuccessful, but as long as you have more successful and you're always conscious about risk management, right? I intentionally did $50 stock that trades in pennies, and I did not do NVIDIA because I know that majority of the subscribers have less than $10,000 in their portfolio, and the risk is too great, right? If I'm wrong on Marvel, and it's, let's say it reaches 49 put, right? Market is selling off and we're getting close to 49. Okay, if I'm off by 2%, okay, it's $80, 3%, $150. On a $10,000 account, it's less than 2.5%, right? My rule is, doesn't matter what position you get into. It could be a penny stocks, it could be future on options on futures, it could be whatever the most intricate products you can find, or exotic products you can find. As long you can trade anything, as long as you're not risking more than 2.5% of your account value. If you're consistently risking more than 2.5% of your account value per trading, especially if you're new to trading, then maybe this is not the right strategy or the right product, right? Or your size is incorrect and you just need to size correctly. So earnings strategy, that's been very popular. There's earnings every week, right? Out of every quarter, I think there's only 1 week where I don't do earnings. Every other week I do earnings. So some of this option trades, some of them are stock trades, right? So I did buy SH because I was concerned about, again, Powell's speech. I was concerned about NVIDIA not hitting a home run. Well, they did hit a home run, but they're still kind of rolling over. So hedging, right? So I always try to hedge my portfolio. Sometimes I'm outright bearish. Sometimes I have combination of bullish and bearish positions, but I did buy SH because I was a concern, right? So it's not just options. I do trade stocks or ETFs. And if you're trading options, I did buy, I added to the hedge, right? If you're trading options, then consider maybe buying 360, 340 put spread, because you can see QQQ is sitting on the edge, right? We're kind of almost retesting the lows from last week. And then if this level doesn't hold, you really don't have a lot of support, right? If we drop below last week low, right? If we're below 350, next level would be 330, right? Next level is 330, 335. So it's important for the bulls to hold on to this level, right? And whether they will or will not, in my opinion, that they will not, and then pull back. It's just the time, right? Timing, hard to decide, but whether it will or will not, I think it's a little bit easier. So combination of stock and option trades, I encourage you to watch the recordings. It's not enough just to, the advantage is you can enter your phone number and get text message every time I trade, right? You can always log into your site, to our site, to your account, and look at all of my orders and positions. They're all transparency. Every single trade gets recorded in performance. So, I believe in transparency, but education is more important, right? Education is more important than getting SMS messages every time I trade. Why? Because for somebody, maybe Marvel makes sense to trade, but somebody not, right? If you have $500 in your account, I would not trade Marvel, right? If you have $50,000 account, maybe it made sense to sell NVIDIA. And I talk about this, how to determine the position size and trade size in these recordings. So I encourage you to participate live, and when you don't have time, and even before sleep, I have this monotonous tone, a little Russian accent, or Ukrainian accent. So you can fall asleep much easier, and you can fast forward. So I do encourage you to watch the videos, morning bell, closing bell, and every session gets recorded, right? So it is, if you're new to trading stock or options, if you still don't have a well-defined trading plan, you don't have this mechanical routine trading, right? Mechanical trading. My new phrase is trust the process, right? my coach in Orange Theory keeps saying, just trust the process. You trust the process, you can run marathon. You don't have a process, you don't trust the process, you cannot run marathon. Trading is no different, right? Trading is no different. Trust the process. If you don't have a process, at least have some kind of rules. Well, you want to watch if you don't have the process, you want to watch the recordings or participate live. That would be the first rule. The second rule, keep a journal, right? Keep a journal, document your thoughts, document your trades. That would be my proposal. And the most important, again, if you go through some of our tools, like seasonality, or if you go to Stock Forecast Toolbox, almost all the pages we have these notes, important notes, right? These are the most popular questions people ask, right? And the most popular, my number one rule, probably should shift note one. This is number one rule, is that if you don't trust the process, if you do not trust the process, then 4 active positions at a time, no more than 2.5% of account value per position. So this way you're kind of shielded from the uncertainty or from surprises, right? Worst case scenario, 4 positions, let's say you are bullish, 4 positions, 2.5%, market pulls back, QQQ pulls back 7-10%, the maximum loss is 10%, and you can recover from that loss, right, if you need to trade in. If you're down 20%, you're down 30%, it's going to be very hard for you to recover both mentally and physically, right? It's very, when you trade based on emotions, it's very difficult to make good trading decisions. Any questions? Peter, Don, Tom, Mark, Joseph, Michael, Andrei, Chuck, Kevin, K-O-K, don't want to mispronounce the name, Michael, Peter, Sean, Skip. Any questions? Mark, Tom, JGW, Alex. No questions. Okay. So Stock Forecast Toolbox. So what are other tools we do? We went over seasonality. I like this tool. It's not, there's no one signal that you can use, but it could be one of the few signals you can use. Basically, at least be careful that, end of August, usually market reaches some kind of a bottom, right? And then with September, usually people, Labor Day weekend, they feel rested and market rebounds. So seasonality is important. This is one tool I do use for ETFs, maybe for individual stocks less, but for ETFs, seasonality does play a role. Stock Forecast Toolbox, right? I would go every day when market opens and look. 443 is overhead resistance, still downward momentum, 435 support. 9 out of 10 times, or 80% of the time, it's like a crystal ball, right? It basically says, if we do reach 443, you probably want to go short. That was a good idea yesterday. If we get to 435, market is overbought, maybe it's time to think about going long, right? And you can see spiders today with the new information, right? Powell's speech is kind of, model doesn't train on Powell's speech, but he didn't say anything new, almost to the penny, right? It hit 40.35 and rebounded, right? Strong rebound. I'm not saying this level will not hold, because you could, these news can drive the market, but at least you see there is a short rebound from 435. So model does spot these pressure points, right? It does spot pressure points, basically saying 435, market is oversold. 443, market is overbought. So if you want to do day trading, or even if you want to get into a position, let's say you're bullish and you think that NVIDIA is a buy after this, 10% pullback. Don't buy NVIDIA at 443, buy NVIDIA at 435, right? At least this is almost 2% difference, right? So if you can save, 0.5% or 1% on entry of your position, 0.5% to 1% on exit, and you're consistent, you know that the model is right 81% of the time. Okay, then that compounds, right? Every entry, every exit, if you're not buying, because most of the time what we do, we buy at 443 and we sell at 435. The model kind of teaches you to think opposite. right? It helps you to rewire your brain where you always buy on a discount, right? And you always sell when the market is overbought. So stock forecast tool, and you can enter, if you want to enter NVIDIA instead of spiders, I mean, okay, it's same idea, right? Same idea. It's at 463. Maybe it's a little bit oversold. Maybe if you're bullish on NVIDIA, this is the time to buy, right? If you're short-term aggressive trader, because the bull trend is still intact. Any questions on stock forecast toolbox and seasonal chart? Cash secure, how to use Tradespoon to find best strike prices. Chuck, okay, cash secure puts on Amazon and Google. Well, first I would look at QQQ, right? So the QQQ is very highly correlated to both Amazon and Google. I would just follow QQQ. So if you want to do cash secure puts, I mean, market right now is oversold, so you can do cash secure put, right? But if we do break, let's say below 350, I would exit out these cash secure puts, right? So if we do drop by another 2%, I would exit out, right? Because the next level is 330. And Amazon, if QQQ goes to 330, Amazon will drop and Google will drop. So that's first rule number one, right? Or first suggestion, not rule number, but first suggestion is that if you see QQQ drop below 350, you want to exit your Google and Amazon position. Strike prices for Google, it's 50-day moving average, right? It's outperforming the market. The uptrend is still intact. I closed the Google. I was bullish on Google. I closed it because I was concerned about NVIDIA earnings. This was the right decision. Maybe it's time to re-enter the trade, right? Maybe it's time to get back into Google, right? The way I did it as a spread, right? I did it at the spread, and maybe it makes sense to now get back to the trade again. If you're doing cash secure put, I would select strike price, 125, right? 50-day moving average. And again, if it drops below 50-day moving average, I would exit the position. Google, right? Amazon also has been outperforming, had decent earnings surprise. It's sitting at the 50-day moving average, maybe sell 128 put, cash secure put. It drops below 126, I'm out, right? I would not sit and watch where Amazon and Google will find the bottom. So if you want to build bullish position, cash secure puts, again, on a $10,000 account, I would not do more than one contract, right? If you're doing this on $10,000 account. And maybe it makes sense to not just do cash secure put, but do like more of a mirrored put. You do a credit put spread, right? You can sell 128 put and maybe buy 120, right? If you get a sign, great, you like it, you're happy. But if it drops too quickly, if it drops quickly down, at least you have some kind of a hedge, right? And you can do widespread, but maybe spend 1%, spend $1 on Amazon, buying that out of the money long put, right? So instead of doing cash secure put, you could treat it as a cash secure put, but still buy that hedge, the put out of the money put. Thank you, Chuck. Any questions? So that's Amazon, that's Google, stock forecast toolbox. We talked about seasonality. What else? If you are experienced trader, if you have the process, right? If you trust the process, we do have different services: active trader, weekly trader, and monthly trader. Basically, model runs a similar model, and it says, what are the opportunities today in the market? Actually, model did not see any opportunities today, so it said, don't buy anything before Powell's speech. Yesterday, TJX, right? So, okay, so you buy TJX on pullback, it gives you specific entry point at $90, 89. If it drops below 88, you're out, and you have choices A or B, right? So you do have these models. I encourage you to consider using dollar cost average. Take the 2.5% risk and divide it by 2, right? So basically, don't risk more than 1% per trade, whether it's short-term, you hold it for a couple of days or you hold it for a couple of weeks. don't risk more than 1% of your portfolio, and split the trade into two, right? Active trader, I'm risking 1%. Weekly trader, I'm risking 2.5%. Again, these are suggested prices for somebody who has the process. If you have a question that says, Vlad, if it reaches 89.40, should I buy or should I not? It's probably not the service for you, right? Because you don't have the process, you don't know how to deal with morning gaps, you don't know how to deal with the risk. I would suggest to use one of our like elite circle, right? Where at least I have a trade, you in the live trading room, you can ask questions and I can answer. But if you use an active trader and you don't trust the process, you don't really understand what to do if it doesn't reach 89.11, then you probably just still new to trading, you don't have the process, and you kind of trying to find yourself on the journey of being a trader. There are better services, right? This is the services where you basically say, Vlad, I trust the process. I understand what to do if it's 89.11 or if it's 89.40 or if it's 89.05. So that would be my proposal. We do have active trader, short-term trading, weekly trader, you hold position for a couple of weeks, monthly trader, a couple of months. If you want to know what I trade, again, elite circle, robo investor is just stock trading. Premium portfolio is spread trading, right? Option spreads. We've seen QQQ, IWM, XLF. Shadow trader, you just follow my trade. There are no tools. Elite circle, you get access to everything. And we do have a lot of free educational content. So I encourage you to visit our YouTube channel, hit the like button. If you're part of the YouTube channel, hit the like button, participate. If you haven't done that, we do have concierge service. So we do have different services and different plans, right? You can pay, every month. You can pay once a year. You can pay a lifetime with a small maintenance fee. So we do have Jordan. His name is Jordan. He's our product specialist. He understands our pricing pretty well. He can help you with finding, the right deal, the right price that fits your needs, learn about you, and help you explain the products. Even if you're not planning to get a paid subscription, at least you understand the products, you understand subscription, and you get more familiar with the site. So give him a call, Jordan, 312-625-0287. Any other questions? Okay, I think I covered most of the content. Looks like yield is going higher at the belly of the curve, right? 5-year yield, 30-year yield is fluctuating between gains and losses, which is, I think, bullish for the market. QQQ, I think, Spiders is off the lows, right? It looks like we're trying to find the bottom where the model should suggested it, 435, right? So 435 is an important level, right? That's the model predicted low. Obviously, if we don't hold the 435, we retest the last week lows, which we already do, right? 435, 433, it's, very quick. So we've retested 433, at least for now, successfully. Bulls want the 433 to hold, right? Bulls want this level to hold. Whether we will or will not, for now, it's pretty bearish price pattern, but it's oversold. So, all eyes on this last week low 433 level. Any questions? And one of the issues is dollar. Dollar continues to rally, right? So that's bearish for the market. All right, anything else? Don, thank you. Chuck, thank you. And silver is the opposite of dollar, right? So my answer on silver is the same on dollar. I think dollar is overbought. I think silver is oversold. Silver did pop, pretty strong pop, but now dollar going up. So if dollar continues to go up, silver will sell off. If dollar pull back the way I think it's what's going to happen, then silver will continue to rally. right? But right now you need to wait at least 1 or 2 days for bulls and bears to do the arm wrestling, right? The arm wrestling match is still on, right? So for now, I would wait, especially as dollar continues to go higher, and every week it makes new highs, right? I think the reason silver pulled back because dollar was overbought, and everybody said, dollar is going to pull back after Fed, after Powell's speech. But now it's retesting June highs, right? The 104.5. So if we break above this level and next level would be 106, silver will sell off. If we roll over, if the dollar rolls over because it's kind of elevator up, right? Since middle of July, it's been elevator up. If that elevator is not, we don't know where the elevator is going to stop, right? It could stop at 104.5. It could stop at 106. But it's too far, too fast. So, and hopefully that helps. Any other questions? All right. Thank you very much. Have a great weekend. Wish me luck. I'm going to get a dog today. Never had a puppy in my life. My 8-year-old is super excited. Watch the blog on Yellow Tunnel, right? I'm going to write my experience. So please join Yellow Tunnel, sister company of Tradespoon, and have a great weekend. Enjoy time